Kingston Properties Limited, JC ticker KPREIT, closed out their 2023 financial year with a 22% increase in net profits year over year, closing out the year with net profits of US $4.6 million. This is Kingston Properties earnings call for the financial year ended December 31st, 2023. And I'm your moderator, Renee MacDonald, Investor Relations Lead at L.E.A.R.N Grow Invest. Please join me in welcoming Mrs. Tatisha Rowe, Senior Operations Executive at Kingston Properties.
Hello, good afternoon, everyone. First, I'll go into prayer, and then I'll hand over to our CEO, Mr. Kevin Richards, who will be presenting on the key highlights and overview for the year. Let us pray. Lord, we are grateful for this opportunity to come before you to say thank you for another beautiful day. We are grateful for this opportunity to present our financial results via this medium. We ask that you bless us as we present and that the investing public will be receptive to the information as they are disseminated. Lord, we ask that the technology will hold up and there will be no issues. Continue to bless our team, our board members, our executive. Lord, we ask that you touch our shareholders, investing public at large. Lord, we're also asking for a special blessing on the LGI team. Continue to bless their business, help them to grow and execute on their goals. We ask these and many other blessings in your name, I pray. Amen.
Amen. Thank you for that, Tatisha, and good afternoon, everybody, far and wide, wherever you are, joining us for yet another earnings call for Kingston Properties Limited. I also want to congratulate the LGI team first for affording us the opportunity to make a presentation on how the company performed in 2023, but also for your exceptional work in bolstering financial literacy. I think it's a very important thing that is needed in the economy, and you've been playing a wonderful part in that regard. Again, good afternoon and welcome. First, let's talk a little bit about KP. I like to start by introducing Kingston Properties because even though this is one of many earnings calls or investor briefings that we've done, we always have to acknowledge that they are persons who are very new to the company and not familiar with the company. So I like to go into a little bit about our identity. Kingston Properties is a company that specializes primarily in value-add commercial property investments. And we operate mainly in the industrial, that is like warehouse space, office buildings, multifamily properties, and mixed-use spaces. What we do is that we give investors the opportunity to participate in real estate assets, whether it's locally in Jamaica or in any of the jurisdictions that we operate in. And you can see by some of the properties highlighted on that screen, we have properties in Jamaica, in the Cayman Islands, and in the US. So we give you exposure to a multi-jurisdictional real estate portfolio. And one important thing too is that we pay fairly good dividends, and those dividends are paid in US dollars. We will go into some of the other properties that we have as we proceed in the presentation. Just some quick facts on 2023. We reported record rental revenue of $3.8 million US dollars, net profit of $4.7 million US dollars, yet another profit, another record. And from the investment calculation of funds from operations, we returned 1.4 million or generated 1.4 million in cash. But when you look at a cash flow statement, our cash provided by operations was 2.5 million US dollars. We paid out last year 1.4 million in dividends for a dividend yield of 3.1%. And as we continue to expand the portfolio, we have grown the size of the properties that we have under management to a total square footage of just under 500,000 square feet. And in our arsenal, we do have about 112,000 square feet of land that is either slated for development or just part of our general portfolio. We're happy to report that we had for the full year 98% occupancy, which is well above a target set and typical for the REIT industry. Some of the key highlights, again, of 2023, and I'm wearing my shirt, we had our 15th anniversary. We started this company back in 2008 during the Great Recession, a time when most persons were shying away from making any commitments in the investment space because of what was happening at the time. But the founders of the company had great foresight in creating what has become a very successful company after 15 years of operation. And we celebrated that, marked that with many different activities last year in 2023, and some of it continues over into 2024. Now, the key highlight, as it's shown in the photograph there, is that we acquired our single largest property investment with acquiring a large stake in the Grand Harbor Commercial Center in the Cayman Islands, along with an adjoining parking lot for approximately just under $15 million US. Again, this is the single largest investment we've made in our history. As I mentioned before, we achieved a record high, both total revenue and profits, and Andre will get into that a little later in the presentation. Another thing too is that given that the environment that we've been operating in is where interest rates have been fairly high, we started a program from late 2022 to eliminate all of our variable rate debt because there was great uncertainty as to where interest rates were going or how long they would remain elevated. And we started that process in the fourth quarter of 2022, continued into the first quarter of 2023 to eliminate all of our variable rate debt so that we can have predictable interest costs going forward. While doing that, we still maintained a healthy cash position to aggressively scout deals, service our debts, and more importantly, to you as a shareholder, to pay dividends. Other highlights is that we also monetize some of the assets that are in our portfolio. We've completely exited the condo market in South Florida. You'll recall that we entered into that market in 2010 at a very opportunistic period, and we have done fairly well in that portfolio. We've exited completely out of the condo portfolio with the sale of our last condo in January 2023. In August 2023, we also sold the Dumfries Road property, which we had acquired in 2021, and both transactions netted the group a gain of $443,000. ESG is a very important part of our business, and we are happy to report that we hit a number of our targets set for the year, and Tatisha will get into that in a little bit later in the presentation. Also, one of the things that we did in 2023 is that we spent money on our properties. Once we continue to improve the plant and buildings that we have in our portfolio. This is to ensure that we continue to attract some of the best tenants that are out there, and to ensure that we take them to a standard close to, if not at, Class A standard. Another thing, and a huge environmental milestone that we hit, was to achieve our gold green certification, and we'll talk a little bit more about that. And as well, we have received approval on a mini warehouse development project that we're going to be pursuing here in Jamaica, and that's for the construction of 14 units, and that you'll hear more about that as well a little later. Looking at the portfolio overall, over the last 10 years, we've experienced tremendous growth, starting at about 8.6 million in 2014 to where we closed the year last year. And this is just the real estate portfolio, which would comprise all the buildings we have, some of the real estate partnerships we are involved in, some of the development lands that we have, to close the year at a value of 66.8 million. Included in that, and one of the things that would have accounted for the large jump year on year from 2022 to 2023 is the acquisition of the Grand Harbor Commercial Center in the Cayman Islands, as well as $2.6 million worth of fair value uplift. That is the increase in the value of the portfolio, the properties in the portfolio. And this is netted, of course, against those sales that I mentioned earlier. In terms of the distribution of the portfolio, geographically, as I mentioned before, we're in 3 main territories: the US, Jamaica, and the Cayman Islands. Our largest exposure remains in the Cayman Islands at 55%, 38% in Jamaica, and 7% in the US. In terms of the subsectors in which we hold properties, 7% of our portfolio is in the residential sector, 31% in office, 33% is in industrial, 15% in retail, and 14% comprises other. And other would be some of the development lands that we have, some of the real estate partnerships that we are involved in, as well as special tenants that we have at some of our properties. A thing that I'm particularly obsessed with is our stock price, and I will go into many segments talking about our stock price during this presentation. But one of the things I like to highlight the most is how our stock price has performed relative to our book value. Highlighted in blue, you'll see what our book value per share is over the last 5 years, from last 4 or 5 years from 2019. 2019, we were at $6 per share, and we've closed 2023 at $8.39, which represents a 40% increase over that time period. And if you look at what it was year over year, it was 8.25%, moving from $7.67 at the end of 2022 to $8.39 in 2023. Prior to 2022, our share price has tended to trade like most REITs, particularly most global REITs that we track, tend to trade at a premium to book value. And since 2022, we have been below book value. And there is a particular gap that we see right now between where our stock price is at the end of December 2023 versus what our book value per share, and that's that difference between $7.80 and $8.39. If you look at how the stock has performed year on year, it remained relatively flat, a slight marginal increase year on year, moving from $7.75 at the end of 2022 to $7.80 at the end of 2023. But if you compare that to what we consider to be the benchmark for the market, which is the JSE main index, and we are a main index listed stock. So our benchmark for performance would be the JSE main index. And if you notice, that index declined over the same period. I'm going to hand over to Tatisha Rowe, who will give us the KPREIT's ESG report.
Thank you, Mr. Richards. Certainly, we would not have been able to present to you our outstanding results today if it was not for our talented, committed, and dedicated team. We work very hard to accomplish not only our high-level goals, but also personal goals. And so as our most valuable asset, we ensure that there are strong policies in place to support our team members. We operate in an environment of respect. We are like family. I know it might sound cliche, but we really are. And to balance our hardworking nature, we also ensure that there is fun, relaxation, there is rest. We support our team in terms of ensuring that there are policies and programs in place for mental health support and the physical health support. And of course, training and development, we will certainly continue to invest in our team by ensuring that they have adequate tools and resources to effectively carry out their job functions. We're a high-performing team, and so it is imperative that we have all the resources that we need so that we can continue to have outstanding results. Environment, on our environmental front, this is very important for us in terms of how we operate. In 2021-22, we officially launched our Green Initiative program and policy. Last year, we accomplished the Silver Award in the Green Business Jamaica program that is offered by NEPA. And I am proud to announce that we have accomplished the Gold Award this year. In terms of the policies that we implemented and some of the initiatives, it ranges from the kind of material that we use to clean. Our solar project, that is something that we introduced, and we're actually in the procurement process. So that's also added to our overall standing. We will definitely continue to include our neighboring communities as part of our green initiatives by donating our recycling bins. We did that last year, donated some recycling bins to Red Hills Primary. We also have our local properties. We have a recycling program on all of those properties, beach cleanup, and just environmentally safe and best practices. We'll continue to engage in those. It is an annual assessment, and so by November we'll be assessed again. So it is important that we are maintaining all the initiatives that we implemented for the year. So we're very happy that we were able to accomplish this gold award as we set out to accomplish. On the social front, giving back to our community is always important to us. It assists us in being better citizens. The team members get an opportunity to give back to persons in the communities in which we have our properties in particular, supporting the communities in which we operate, as I said before, with a focus on youth development and the environment. And as you can see on my screen there, we were handing over a prize to the 3-on-3 basketball competition winners in L.E.A.R.N Park. We also have donated over $1 million to groups and organizations in support of their lunch programs, their community sporting events, laptops, furniture. And as part of our 15th anniversary celebration, I am happy and we're very proud that in partnership with Food for the Poor, we were able to donate a house to a mother who is well needed, and her children in the Callaloo Mews community. And that community neighbors our 591 Spanish Town Road property. So that was an outstanding accomplishment for us for last year. Of course, we continue to partner with individuals and groups in these communities. And of course, we'll be extending our partnership pool. Governance, we do have strong governance structures in place. Currently, there are 7 independent directors, 4 board committees, and of course, annually, we have our annual board evaluation on training. Our board members have expertise in the fields of investment financing, accounting, real estate, human resources, and law. We have adopted the PSOJ code on corporate governance. Just to strengthen our structure and accountability framework, we've implemented conflict of interest and whistleblower policies in keeping with global best practices. And I'm also happy and proud to announce again that for last year, our JSC Corporate Governance Index score improved, and we accomplished a score of 87.63. This is coming from a score of 81. And I just want to note here that this is due to deliberate and intentional on our part to ensure that, one, we are looking at the areas where there are weaknesses to improve, and also to ensure that our stakeholders and shareholders in particular, that they feel valued, their rights are respected. We ensure that we are disseminating information in a timely and accurate manner. The board of directors, they understand their responsibilities and they take them seriously. So this ranking shows that KP is not just concerned about our financial performance, but also to ensure that we have a solid company that takes our responsibilities seriously, and that a shareholder, regardless of how many shares you're holding, that your rights will be upheld and that we will operate with the highest level of integrity and transparency. Communication, of course, is important with our stakeholders. It is important that information is disseminated in a timely manner and that it is accurate also, because I know that you, the investing public, you rely on this information to invest, to know whether or not you're buying, selling, or to know what we're doing with your dollars. And so we have a dedicated investor relations officer that is always available to respond to any queries that any of our shareholders, stakeholders may have. We've aligned our ESG and sustainability goals with those of the UN Development 2030 goals. And in addition to the ones that we've already implemented, we plan to develop rainwater harvesting just for additional water supply to our buildings and our properties. Of course, as I had aforementioned, we'll be installing solar generated power on all our properties, installation of solar flood lamps to replace some fluorescent lamps that we still have at some of our properties, translucent roof sheets to permit natural lighting, so we are not relying so much on, from electricity, or if in the cases where we're using solar. Planting of trees with small roots for low dependency on water. And of course, ensuring that we are educating our stakeholders about the importance of protecting our environment. So it's our shareholders, it's our tenants, it's our partners in the various communities, so that they can too play their part in protecting Mother Earth. Of course, we will continue our environmentally friendly practices. We plan to increase our partnerships and donations and our volunteer hours with our social projects that we have. And we'll certainly be building on the policies, the systems that we have in place, and with the aim of accomplishing these goals that we set out. At this time, I will hand over to Mr. Andre Francis, our CFO, who will be presenting on the financial highlights for the year 2023. Thank you.
Thank you very much, Mrs. Rowe, for that. Just want to welcome everybody to the call, and thanks for joining us. I'm particularly excited to present these financial results to you this year, coming off our 15th anniversary. I think we delivered a really strong performance led by our rental income, our core rental income. This year showing a 15% growth in our rental income up to $3.8 million, a record as our CEO has indicated. And the primary thing behind this is the growth in the asset portfolio, as we added the Grand Harbor shops in the pretty much the end of the third quarter of last year, and we've also improved the rental rates at our properties both in Jamaica and in Cayman. Strong property management, improvement in the properties has pretty much ensured that we're able to easily get those improvements in rental rates that we have built in our contracts without any issues. So it's a continued growth in the portfolio, a continued improvement in the rates and improvement in our properties that is really driving the growth in our core rental income. And just to add the diversity of our business, it's apart from our core rental income, we've seen a growth in the total revenues for the company. So we had a 19% growth over last year in total revenue, up to $7 million. And so apart from the rental income, we've also had a significant capital gains where our fair value grew significantly during the period, and we've also had a significant gain on disposal of our assets. So we did dispose of a property that we had in the Dumfries Road last year, and we also exited the Miami portfolio in terms of the condos that we were holding last year. So we did recognize about just over $400,000 worth of gain on sale, and just about $2.6 million worth of fair value uplift on top of the revenue growth. So I want to highlight the us breaking that $1 billion barrier. I know we're a US dollar company, but I think it's important to share that we've broken that $1 billion barrier in terms of Jamaican dollar total revenue. And we did that coming right off our 15th, and I think that was a very good result for us in that year. So this just to look at our core operating income, we have grown that by 25% over last year. And again, it's the strong rental income in conjunction with good management of our operating expenses. So operating expenses have pretty much grown just about 1/5 of the level of growth in our core revenue, and that has given us a really strong growth in our core operating income when we look at rental income versus our operating expenses, right? Just to put that in context, also we've in conjunction with that strong management of our operating expenditure, we've seen where our net operating income margin has grown from 57.3% last year up to 61.5% this year. And that's really a steady growth trend that we've been seeing over the last 5 to 6 years, where we have pretty much been able to grow our income base while keeping our cost under control. Right? This translates also into the bottom line, where our EBITDA and net profit have both seen significant growth, 23% and 22% growth respectively over last year. And this growth is coming from the increases in the core business, as well as the increase in our capital gains as we grow the asset portfolio. But it's also a bit of managing our finance costs. So even though our finance costs grew year over year from about 482 to 681 this year, it still translates into a significant growth in our net profit to 22%, as whilst we hold cash in terms of being able to take the opportunities as they come in the market, we ensure that we basically get as much of the investment income that we can out of those holding those cash, and so that in itself tends to reduce our net finance costs as an impact on net profit. So it's a strategic management of cash on hand, of our debt portfolio and our assets that will generate this level of net profit, right? And just to put that also in a little bit more context, when we look at our 5-year growth rate in terms of rental income, operating income, and net profit, we're seeing strong growth in those on an annual basis. Our rental income growing on average of about 18% per year, or net operating income growing on average of about 29% per year, and about 16% growth annually for our net profit. So these results are not flukes. They are pretty much the culture that we have developed here of creating value and using the assets that we have to generate value for investors, and we'll continue to do that. Another key metric that we like to look at and is very important for investors is our funds from operations. This is basically the real cash that's generated each year from the business. That has grown by 4%, and this growth is important because it's the basis on which we usually pay our dividends to our shareholders or return that value to our shareholders. And so a key objective that management has is to grow this number year on year, and we have grown that by 4% this year. And when you will see that continues into ensuring that we have dividends remaining at a pretty high level going forward, right? Just to in terms of the dividend trend, we can see that this year and last year, we've really broken that $1 million barrier and intend to continue to grow dividends in that way. And it's a direct result of growing our FFO and keeping the funds from operation at a very high level. Okay. Now, just to look at our financial position in itself, we spoke about the growth, the acquisition of Grand Harbor to our portfolio. This has really driven a significant 20% growth in our asset under management at the end of 2023. We're now at $70 million. The aim is, as CEO will tell you, in the short term is to get to $100 million, and we're heading there nicely with a 26% growth this year. Apart from the acquisition of Grand Harbor, the asset values from the existing assets have also improved significantly this year, and that has helped to push our asset under management nicely for 2023. So when we look at our debt portfolio also, the debt portfolio has grown from 11 million last year to 22 million this year, particularly because we financed the Grand Harbor acquisition for during 2023, but we've also paid down some of the debt that we had existing, and we did refinance the last set of variable rate debt that we had to ensure a more predictable impact that the debt financing will have on our P&L, and so we're really proud about that strategy. But the growth in the debt stock is really a stepping stone for the growth in the business itself. And when you look at some of the key ratios, you'll see that we're still in a very conservative position, or loans to asset is just about 31% in 2023. Our loan as a percentage of investment property is at a moderate 38%, and our debt to equity is just about 46% at the end of the period. We like to compare that to our loan covenants as we look at how much capacity we have to leverage the business a bit further for growth. And right now our debt to equity, not target, but max limit is about 5-1, and our loan to value ratio is a max 70% based on what our debt covenants are saying. So you can see that we are basically in a position where we can access financing for the growth of the business even into next year, right? Some of that is that we're continuing to build intrinsic value in the company, and this year our equity has grown to $47.9 million, which is a 7% increase over last year. So we've grown the business through the net earnings for last year, net of the dividends that we continue to pay out, and this has really build that intrinsic value that the investors are looking for, and that we as management striving to deliver for our stakeholders. So all in all, I think this year was a really strong year for us, not just on your financial performance from your income statement, but also a strong financial position backed by a growth in our asset and definitely translating into our equity base. All right. So with that overview on the financial for 2023, I'll hand it back to our CEO Kevin to give us an overview of what's to come next for 2024 and beyond. Kevin.
All right. Thank you both, Tatisha and Henri, for great presentation, if I should say so myself. But let's look at this sort of macroeconomic environment that we believe we were likely to be operating in for 2024, because that is going to steer what our strategy is for this year. We have been talking a lot about what the Fed does, and we all can speak about the correlation between Fed action and the impact it has on global interest rates, for example. While inflation is moderating in the US, the expectation still remains that interest rates will remain elevated. I think Jerome Powell has signaled that, holy horses don't expect any rapid decline or any soon decline in interest rates. So we expect that benchmark interest rates, will remain elevated for a while longer. Juxtapose that against a major event that is likely to happen in the US, which is their presidential elections, to happen in November of this year. Typically during an election period, there tends to be high levels of spending and some levels of economic boost. So that could likely have some good impact on commercial real estate, particularly in that market. And, again, that has some contagion effect for other markets. What we are seeing, though, is that while interest rates remain elevated, there is some distress that is taking place in commercial real estate, largely because of the high levels of borrowing and the types of borrowing. Most of those borrowings are in variable rates, or they were fixed and variable. So some of those facilities are now repricing or coming due or maturing, and they're now, refinancing them at higher rates. That's a concern for a number of commercial real estate companies as well as financial institutions that are exposed to commercial real estate. And we see that as opportunistic, as it could create options for investment in distressed commercial real estate. Again, as we like to repeat, and Andre touched on it, is that our key strategic imperatives for 2025, by the end of 2025, we hope to have our total assets under management, that's owned and managed, at $100 million US. And of course, we want to achieve average return on equity of about 10%, or we did so in 2023. For that, we're very grateful. And to boost our funds from operation from 1.4, which it was last year, to 2 million by the end of next year. Some of those things that are going to guide the strategy so that we're closer to achieving those numbers is, and we spoke about this since our AGM last year, that we're going to continue to monetize some of our assets. We do have a particular hold period for our investments, typically 5 to 7 year hold periods. Some of the assets in our portfolio are nearing the end of that cycle. We did take advantage of some opportunities that came our way to monetize some of the assets in the portfolio last year. We spoke about the last of the condo and the Dumfries Road property. There are some other assets in the portfolio that we are looking at monetizing. The proceeds from the sale of those assets, we hope to deploy into new value add commercial real estate opportunities, which is sticking back with our core business. And the thing that has allowed us to achieve this level of growth and phenomenal performance over the years is by sticking to our core of investing in value add commercial real estate, and benefiting from both the uplift in fair value from the improvements that we make to these properties and the higher rents generated from these properties. So we're doubling down on that strategy. Again, why it is important, because generating cash for our business is our core. And, we talk a lot about whether it's funds from operations or cash generated from operations. Those are important because paying dividends is something that we'd like to say that we continue to do consistently so that, investors will always take a favor to KP. We like to keep dividends consistent also because in terms of investment options, we would like to look at KP as your preferred investment option, and the returns that you get from investing in KP stock is greater than many of the other investment opportunities out there. We also are looking at widening our geographic reach, extended beyond the hurricane belt. We are investing in Jamaica and the Cayman Islands, and we know how those islands are susceptible to hurricanes. So we are expanding our geographic reach, and there are some opportunities that we're looking in markets far and wide. And we're hope to make some announcements about some acquisitions in new markets in 2024. Again, to achieve that 100 million target by next year, we have to do that incrementally. We're hoping that by the end of this year, we could achieve assets under management of $80 million. And there are many ways of achieving that. We can do that strategically by leveraging KP's brand. KP does have a fairly strong brand in the real estate investing space, and there are opportunities for us to leverage that brand through, strategic partnerships or utilizing the capital markets to help us to achieve this goal. And again, we spoke about dividends. That's something we want to ensure that we're continuing to generate immediate cash flows, which would explain the skew in our portfolio more towards cash generating real estate options as opposed to greenfield opportunities, which take a longer time to get to cash. Now, the final thing I want to touch on is our stock price, which I'd mentioned earlier. And, I wanted to figure out a way how we could address the issue of the stock price. And, I was thinking about it over the weekend. How will I address this? And this gem popped into my inbox from Simply Wall Street, which I think sums up something that we've been saying for each earnings call and for each investor briefing we have. And it's that last sentence that is the important part for me, is that generally our performance has not kept pace. The stock price has not moved at the same level as which our performance as a company has been. Andre showed you a graph showing what our 5-year CAGR has been, both for rental revenue, net operating income, as well as net profit. Both of them are in double digits. Net profit on average has grown over the last 5 years at an annual rate of 16%. Usually you'd look at that kind of growth rate and say that's the sort of PE at which a stock should be trading, because it's reflecting the growth rate of the company. Obviously, you would have some discounts to that rate because of how thin the market is. But typically, currently we are trading at a PE of 9.7, 9.8 times earnings. According to Simply Wall Street, for our sector or industry, that should be in the region of about 14 times earnings. So we believe the stock is extremely undervalued. And I mentioned earlier before that we have been trading at a discount to book value for quite some time now. And it's important I make a point about book value, and I made a point in previously, is that we've tended to be very, very, very conservative in how we treat with fair value uplifts on our real estate portfolio. Usually we value our properties on a 2-year cycle. So on the 2-year anniversary of acquisition of a property, that's when we do a valuation on that particular property. So there's a cycle that we tend to use. So we're not doing fair value adjustments every year on that particular property. So different properties have different cycles. The other thing about that is that we tend to be very conservative in terms of the fair value that, at the board level, at the management level that we decide to take. We tend to keep it fairly conservative. And sometimes we'll make a discount on the value, the appraised value that we receive, just because to err on the side on conservatism. That has worked in our favor. If you look at our financial performance in 2023, we took a similar approach with the Dumfries Road property, for example. And by the end that transaction was able to close, we were able to close at a value higher than the appraised or the carrying value of that property in our portfolio. So our conservatism pays off. And I say that to say that although you will see a book value per share of $8.39, if we were to use the appraised value for some of our properties that would actually reflect a higher figure. That perhaps explains why in most of the major economies, REIT stocks tend to trade at a premium above book value. And from what we've looked at in a lot of the US REITs, particularly in that match our type of investment strategy, which is, a multi-sector REIT, they tend to trade anywhere between 1.2 and 1.6 times book value. And right now we're trading at roughly 90% of book value or less. So it's interesting. It's something that we want to continue to have more conversation and dialogue with the investing public. And this is why a forum such as the earnings call through LGI helps to facilitate those discussions so that we can ensure that, there is reward for performance. I think there should be some alignment between what we as managers and even the board of directors do to ensure that the company continues to perform extremely well, that is also reflected in the stock price. So we're open to continuing that dialogue and to providing the market. That's what certainly my job as CEO is to provide as much information about the company, which is why we've adopted policies, as Tatisha mentioned earlier, about greater transparency. I think we're a fairly transparent company. We do have a dedicated investment officer. If there are any questions you have, you want minutes for AGMs and that sort of thing, you can reach out to us and we'll provide you with all of that information. With that, again, thank you all for joining us this afternoon in terms of our presentation, and we're open now for question and answer. And we certainly will have the answers for the questions that you have, and I'm handing back over to Renee.
Thank you so much, Kevin and team. I think it was a very informative session, and the information and the context that you provided at the end around the stock price is very helpful to many persons, I'm sure. So as we are going into the Q&A, and congratulations, before I go any further, congratulations to the KP team for an excellent performance. Congratulations on 1 billion. Congratulations on 1 million. I am sure that the shareholders are happy about that as well. So as we are about to go into the Q&A, I'm going to invite both Tatisha and Anne-Ray to join us back on screen, because the questions do span the presentations from each of you. So there are a number of community questions, and we will begin with a question that I think actually also helps to frame how persons can invest in KPREIT, right? The question is from Adrian Leng, and the question is, how do you go about acquiring the Cayman shares from Jamaica?
You mean Cayman properties from Jamaica? I mean, because our shares are listed on the Jamaica Stock Exchange, so you can call your broker and tell them you want to buy KP shares, your broker in Jamaica. In fact, we did a social media post recently which listed all the stockbrokers. No bias to anyone. You can reach out to them if you want to buy KPREIT shares in Jamaica. In terms of how we scout properties in Cayman, if that was the question, we do have relationships, long-standing relationships in Cayman Islands. And, so many new relationships have developed over the last 2 years, because I talk about KP's brand so much. KP has a really strong brand, certainly in Jamaica and in the Cayman Islands. Investment opportunities come to us all the time. And we just have to evaluate each investment opportunity and see if it fits with our metrics. We do have specific requirements, things like, as I mentioned before in the presentation, like immediate cash flow generating. And it should be able to give us, cash on cash returns that's in the double digit. Again, most of our investments are in hard currency, are in US dollars or Cayman dollars. And, if you can get a double digit return on hard currency, I think that's a great move, and that has borne fruit in terms of our performance as we've outlined today.
Just to try to add a little bit of clarity to that as well, Kevin, in terms of the group structure, Kingston Properties Limited is a parent company which consolidates the Cayman company, Kingston Properties Cayman, and Kingston Properties that's listed on the stock exchange. So that's where you can invest as part of the as part of KPL and Kingston Properties Limited, and would have opportunity to basically share the results from the Cayman portfolio. So it's the entity Kingston Properties Limited is a consolidated entity on the Jamaica Stock Exchange. So your broker will help you to invest in KPL Jamaica, which you end up participating in the Cayman portfolio from that.
Thank you for that clarity. I think we did get a question that is not reflected here, but we did get a question about the difference between the group and the company as it is done in your audited financials. So thank you for that clarity. The next question is asking how do I get in touch with the IRO to ask my questions? Both Tatisha and Kevin would have mentioned the IRO, so we'd love to have that information to share with the audience.
Sure. You can contact us on any of our numbers, 876-754-7840, or via email at info@kpreit.com. We also have our website, so you can go on our website. Information is provided there as well. Yeah.
And our social media as well. We're responsive there.
Okay, wonderful. How does KPREIT compare to other real estate companies listed on the JSE?
Yeah. So that's, I think it's something best answered by a broker who does that sort of comparison. One of the things that we've found very difficult to do is that different companies have different investment strategies. So it's not necessarily comparing apples with apples when you look at a company like ours that is more heavily skewed towards immediate cash flow generating real estate opportunities, as opposed to a company that is primarily focused on greenfield development, where it takes a longer time to cash flow. And that will show differences in performance. But in terms of things, say like dividend yield, we are certainly one of the top paying dividend yield real estate listed companies on the Jamaica Stock Exchange. In terms of things like return on average equity, we are one of the top performing real estate investment companies. And again, this is a kind of comparison that I think is probably best done by a broker, because I'll spout too much of my biases right here.
Okay, thank you for that. Next question. Are there plans to increase the dividend yield?
Well, that's a double-edged sword. I mean, the stock price goes to $10 tomorrow, and our FFO increases by 5%. Will that increase the dividend yield? Not sure. Do you want the stock price to go down or to stay constant? You have to make that decision. At the end of the day, the dividend payout is dependent on what our FFO is, or if which we've done from time to time, made special dividend payments. If we've made a big gain on a sale, for example. So you could see the dividend yield being anywhere between 3 or 4.5%, depending on how the stock price actually performs.
Understood. What is the benefit of investing in a stock like KPREIT?
Yeah, well, the other thing, as I said, one of the main things, I think it gives you exposure to a diverse portfolio of real estate assets. So different types of real estate assets, whether it's an office building or a warehouse, but also gives you exposure to real estate in different markets, different countries. We mentioned we're in Jamaica, we're in the Cayman Islands, which is a tax neutral economy. We're in the US, and we're looking at other markets as well. The other thing too is, let's, for argument's sake, you had $50,000, and I'm just pulling a number out of the hat. It's not indicative of anything. If you had $50,000, you have many options you could look at what to do with that. You could keep that in a savings account. You could, buy, treasury bills or something, or you could buy a stock such as KP, we've looked at, for example, let's say you had funds sitting down in a savings account, which some people tend to think that is some form of investment. If you have funds sitting in a savings account, you're basically earning less than 1% on that $50,000. Whereas if you had bought KP stock, you could earn, just from dividends alone, at least 3% in US dollars. So I think that's a huge benefit if you're looking at all the different investment options that are out there. Consider a REIT, because real estate is one of the best performing asset classes over the long period. And, studies upon studies upon studies have proven that. And particularly for KP, we do focus on generating cash flow to pay dividends to our shareholders consistently and competitively.
So I'm hearing you say, one, you're getting the ability to diversify your portfolio without having to do all the hard work yourself.
Correct.
Two, you're also getting to earn in US dollars through the dividends. Three, you're likely to get dividends because KP is consistent with dividend payments.
Correct.
Right.
And let me add four. I think we also have a fairly strong team that will help to manage your investment. So one of the fundamentals of good investing is to, if you are not able to do it yourself, is to ensure that those who are handling your funds is capable of doing that. We do have a strong and diverse board that is covering a wide spectrum of discipline. We have a strong leadership team here and a strong team in general that continuously strive to deliver good results for our stakeholders. And I think that's one of the key things that you really ought to consider a KP with a good track record of delivering good results. And you'll see the trends over the last 10 years, the last 5 years have all been strong performance, primarily because we have a good strategy that we're executing on well.
I agree with the importance of a very strong team.
Yeah.
And I believe you're going to stay on the floor for this one. What does LTV, or loan to value ratio, mean?
Right. So this pretty much that is the level at which your loan compares to your underlying assets. So when you go to the financing institutions, they will sort of set restrictions on how high your total loan book should be in comparison to your asset values. And for us, primarily that's about 70%. The financing institutions tend to limit your borrowing to about 70% of your asset values. We typically finance at a lower level than that for our being conservative and managing our leverage properly. So we really have quite a bit of room to actually leverage the business for growth. So we typically finance either through debt or equity or some mix of that, or probably even more exotic stuff like your partnerships and so on. But from a debt perspective, we do have the capacity just from those covenants that we have in terms of loan, the amount of loan that we can have compared to the value of our assets.
Understood. So for those who may not have the deeper understanding or exposure to something like LTV, it is similar on the personal finance side to a DSR, a debt servicing ratio kind of situation.
Correct.
Right. All right. So thank you for that. What factors impacted your ability to meet the targets set out in your rights issue projections? This would have been around 2018, 2019, I believe.
2019 projections would have factored in doing a number of raises. I assume you're talking about getting to assets under management, if that's the question. We had factored in doing a number of raises from 2019. However, there was a major global event that happened in the midst of that sort of changed that trajectory. And certainly what we've observed in the market over the last year and a half at least, market hasn't particularly been friendly to new capital raises. So we're happy that we are progressing at the pace that we are. We're fairly comfortable with it because we are remaining profitable. If you notice from 2019 that we have been a profitable company during that period, and steady as it goes is our preference.
Thank you for that. Are there plans to buy back shares this financial year?
We look at it as an opportunistic thing. So if there is some value in doing that, then it's something that we'll consider. But it's not something that is on the cards immediately. But anything can change in a few months' time.
Understood. Re-ESG, Tatisha, is KPREIT a fully green company, or KPL a fully green company? And what is the progress of that? I believe you would have shared on that earlier. And if there's any other context you'd like to give, you can go ahead and do so.
Sure. So we're not fully green as yet. We're hoping to get there. But of course, there is a significant investment that involves getting the international certification, for example. So currently, 3 of our local properties, that's Red Hills Road, the Grenada Crescent, as well as the East Ashland Room properties, those are the ones that's participated in the Green Business Jamaica program. And so those are the ones that are currently received that gold award. So of course it is in our plans, and we're just taking incremental steps to get there. We are planning also to, as I had outlined in the presentation, implement some other policies and some other put some other systems in place, but also to add some of the other properties as we go along. We're planning to roll out maybe a more templated approach to, say, the Cayman properties. They currently do not have a similar program to the Jamaica business program that we have here. So we are looking at, for example, we change out the windows. That was a part of ensuring that there is energy efficiency. We've been looking at and changing out old conventional ACs as they come up. We have LED lights there. So across all our properties, we've been looking at how we can better manage energy and to implement some sort of the program that we currently have locally.
Sounds good. This one is also for you, I believe. Is there currently an employee stock purchase program?
Not officially, but of course we're always looking at how we are able to give back to the team and have the team participate in, whether it's, we're having some form of rights or some form of APOs. So it's something that we're looking at, but not yet.
Okay, thank you. Are there any plans to get into residential real estate, whether locally or overseas?
Yeah, I mean, if you look back on the charter, we had a breakout of the different groups. I think we're about 7% of our portfolio is in residential real estate, primarily in the Cayman Islands and in the US. No residential real estate investment here in Jamaica. It is a segment of the market that we'd like. We've done very well in that sector. Back in 2015, 2016, about 70% of our portfolio was in residential real estate. So we do look for opportunities when they come up. So it is something that we keep on the radar.
Clear. And our final question from the community at this time is, how does your treatment of fair value gains differ from others in the market?
I defer to you, Mr. Francis.
Yeah, I mean, I don't think there's much difference in terms of fair value itself, except the fundamental difference of how some companies do it. So as Kevin said, we have a pretty conservative policy where we look at it or assets over a 2-year cycle, and we tend to ensure that we remain conservative in how high we carry the values, especially when we look at the portfolio in terms of whether we were able to realize those values over a short period of time, let's say a 12-month marketing period. So I think most companies typically use some form of an investment approach because we're holding properties for investment purposes, and I think that's the general approach that similar companies would adopt. But I think from a comparison perspective, and just an observation on what I've seen, I think KP is, from a difference perspective, is more on the conservative side, so as not to overinflate the assets. And as Kevin says, that has worked well for us in terms of us realizing these values and the fair value, the actual fair values when we do make a disposal of an asset. For instance, what we did last year. So I think it's similar approach in terms of how the fair values are computed, but in terms of what we carry as our carrying value in our books and the level of uplifts, I think is where you might see some difference with similar companies.
Yeah, and to add to that, I mean, as you mentioned at the first part, is the frequency of appraisals. We tend to do it on a 2-year cycle for properties, and I think there are some other companies that adopt a more frequent approach to appraisal, booking fair value uplifts. Those are usually stated in the audited financial statements. Certainly for us, that is noted in our financial statement what our policy is. So you'd have to look at the different companies and see what their policy is and how they differ.
Okay, so I believe that was our final question. Thank you so much, lady and gentlemen, for making yourselves available to share with your shareholders and to inform the public about the performance of KP over the last financial year. So as we are preparing to close, I'd like to hand over to you one last time, Kevin, to give your closing remarks. I will come back and terminate our meeting, and then we will have a video to share with the viewing audience from KP.
Okay, thank you again, and we want to express our deep appreciation to the LGI team for your continued support in providing a platform for Kingston Properties Limited to speak to the market, to provide more information on the company, to answer questions that investors or prospective investors may have about the company or about the stock itself. And I just want to focus again on, reminding, just reiterating our performance. We reported net profit increase of 22% year on year when we compare 2023 over 2022. And over the last 5 years, on average, we've grown at 16% per annum. That remains a fairly aggressive level of growth for a real estate investment company, and we want to continue to grow at that pace. We hope that will translate into the stock's performance going forward, because once people have information, particularly information about the performance of the company, I think that will feed into the performance of the stock. So thank you again for the platform, and thank you to my team who've worked extremely hard in 2023 and continue to do yeoman's work in creating value for shareholders. And we hope to continue that journey in 2024 and many more years after that.
Thank you so much, Kevin. And again, thank you to the KPL team and to the viewing and listening audience. It has been my pleasure moderating this call. And congratulations again to the KP team. We look forward to seeing more great things from you. We have one comment from Lisa Gomes. She has said, keep up the great work on behalf of the shareholders. She's also asking, when is she getting her dividends? So
we pay dividends twice per year, typically in May and November. So
thank you for that. So with that, we officially end this FY2023 earnings call with KP. We thank you again, and we encourage persons to subscribe to this channel for more earnings calls, for more investor relations content, more investment content, as we seek to continue the good work that Kevin has commended us for. We thank you for taking the opportunity to be transparent with your shareholders. We thank you for taking the lead on investor relations in the market. Thank you so much.
Thanks for having us. "15 years ago, we created a real estate investment company that was so much more than real estate investing. It's about the businesses we've helped to grow and the lives we've impacted. This is our story."
I am extremely delighted to know that Kingston Properties is celebrating 15 years of operations. This is a company that was started with an idea to enable investors, big and small, to invest in real estate so that investors could own shares in the company and didn't have to worry about the hassle of owning the actual property. Kingston Properties had grown from having one asset in one location to being a company that has real estate assets in many different jurisdictions, thus allowing investors to really participate in real estate markets in many different countries. I wish Kingston Properties all the best for the next many decades ahead.
Started working here at Kingston Properties in 2010. So this is my 13th year here. I was employed as a junior research analyst. Over the years, I would have grown with the company, and now I am the senior manager of operations. My favorite thing about working here at KP is the people. We are friendly, we value each other, we support each other, we play together, we cry together. We also get to participate in our social outreach programs here at KP, which is very good for us because ordinarily, most of us would not have had that opportunity. So I'm really glad that we are able to impact lives in a positive way in the communities in which we have our properties. And the fact is, I love working here. I love what I do.
Easily described as one of our golden partners is the group Kingston Properties Limited. This year, Kingston Properties Limited celebrate 15 years of existence. They have been powerful stakeholders and support group here for us at Dunrobin Primary School, from moving across physical upliftment to supporting myself as principal, other members of staff, students, the like. They have done it all for us here at Dunrobin Primary School. And so from our hearts here at Dunrobin Primary School to Kingston Properties, we say to you, happy 15th anniversary.
The past 15 years of Kingston Properties Limited have been about growth and expanding into new horizons. Growth in terms of our property portfolio, diverse tenant base, dedicated shareholders, resilient communities, and amazing staff. We've grown to own and manage numerous properties in 3 countries, representing over 400,000 square feet of commercial real estate. Our shareholders, both individuals and institutions, have reaped the rewards. You stayed with us through every transition, every acquisition, and every milestone. I am Kevin Richards, CEO of Kingston Properties Limited. Here's to honoring the past 15 years, from being Carlton Savannah REIT to Kingston Properties Limited. Treasuring our present team and tenants who stuck with us in helping to shape the future for our shareholders who've placed their trust in us. Happy 15th anniversary, KP.